I recently invested about $300,000 into the Chinese electric vehicle industry, specifically into Nio, Xpeng, and Li Auto. I'm 21 years old and a full-time college student, and in today's video, I'm going to break down some recent news on these companies. After that, we're going to go over some price predictions for the future, and if you like this sort of content, like to know more about what I'm investing in, then be sure to subscribe to my channel. Shares of electric vehicle makers Nio, Xpeng, and Li Auto have all risen over 100% in the last couple of months, but recently they pulled back a little bit because of a report from Citron Research that recommended investors sell Nio. Citron Research is owned by this guy named Andrew Left, and he likes to target companies that he thinks are overvalued. However, just 2 years ago, Citron had urged investors to buy Nio, and now they say the valuation is too high. You never could justify what the valuation is right now. He said that Nio's ES6 hatchback model faces imminent threat from likely price cuts from Tesla's Model Y in China, and they believe that anyone buying Nio stock now is not buying a company or its prospects, but they're rather buying 3 letters that move on the screen in the stock market. Tesla has cut prices recently in China, and they've done this on several occasions to try and gain more market share. But the one important thing that Citron Research is forgetting is that they're treating it like Tesla is going to dominate all of the EV market in China and around the world, but that's just not possible. It's impossible for one electric vehicle maker to produce enough vehicles to meet the demand. It's not even possible for all of the electric vehicle companies to meet the demand right now. There were over 25 million cars sold in China in 2019, and right now, if you're looking at electric vehicle car companies, basically every EV company is maxing out their production. They're producing as many vehicles as they possibly can. Tesla is currently on track to sell 500,000 vehicles worldwide total in 2020. So based on these numbers alone, they're only able to do 500,000 vehicles, which is a lot, but in China, there's 25 million cars sold a year. So there's plenty of room for Nio, Xpeng, and Li Auto. On top of the demand issue, what Citron Research is also forgetting is that Nio is a Chinese-based company that operates in China. They're looking to expand overseas into Europe by the end of this year, but ultimately a Chinese-based company that operates in China probably has an advantage over, let's say, Tesla or a company that's not based in China, because the Chinese government could offer support, they could put restrictions into place, they could do lots of things to ensure that Nio or Xpeng or Li Auto, or all 3 of these companies, are going to succeed in the massive EV market in China. So now let's get into the stock. Nio's stock is currently trading at $43.62 per share. Xpeng stock is trading at $40.65 per share, and Li Auto is trading at $30.40 per share. All 3 of these companies have had massive runs lately, and they've all risen over 100% easily in the last couple of months. A lot of people are now wondering, is it too late to invest in these companies? Did I miss out? And what I think, and what a lot of analysts are saying, is that you're definitely not too late to invest in these companies. If you're looking at numbers strictly in China, China has 25 million cars produced each year and sold each year. And on top of this, they're looking to have 30% of all of their cars sold in China to be electric vehicles by 2025. So that would mean that 7.5 million cars a year are going to be electric vehicles in China. So what that means is that in order to reach that 7.5 million number that analysts and China is projecting for electric vehicles in 2025, that means companies like Nio, Xpeng, Li Auto, Tesla, all of these electric vehicle companies are going to need to ramp up production significantly, build out more factories, build out more production, and not to mention that Nio and Xpeng and a lot of other companies are looking to expand overseas as well. So that's the reason why I'm invested in these companies long term. I'm not worried about any short-term fluctuations, but long term, I think they're great buys. I think Nio has a chance of reaching $150 per share in the coming years, as they are looking to expand into Europe. So anyways, that's what's going on with Nio, Xpeng, and Li Auto. I hope you guys enjoyed today's video. Don't forget to get your 2 free stocks valued up to $1,600 when you download the Webull investing app using the link down below. I hope you enjoyed, and I'll see you next time.